Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on the dollar, gold, and miners. So the dollar here, we formed a lower high compared to yesterday, but we did backtest and hold the 10-day moving average. So it leaves us with an inside candlestick today compared to yesterday's range, and we'll be watching the range of today, 106 support and resistance 164. We still have to get above 101.02 to break the lower high pattern on the daily, so the bears are still in control of that trend until that level breaks. Looking on the hourly time frame to see where we're headed into the overnight trading, we've got our little lower high and lower low, another lower high, so the bears are in control, I would say, more so than the bulls are just because of this hourly trend currently, and I'm looking down at support of that 106 level, and if we do break that tomorrow, we're looking back down at 99.84 is the next support. Checking in on gold, we had a big red candlestick of profit taking on the hourly time frame, and we're seeing a little bit of a bounce off of the response to that, but it's on decreasing bull volume, so I would expect to form a lower high on this bounce and then head back down towards 1236.51 support. Now, it's normal and healthy what's going on, this consolidation, because the daily time frame, the bulls shook off that consolidation candlestick yesterday. Nice continuation to the upside, very strong for gold. We just have to keep in mind, look at where we've come over the past 3, 6, 9 days. So consolidation is normal and healthy. We are still very much holding a strong uptrend, and a key level I would be watching, bulls really want to maintain 1227.64. And actually just want to go back to this pattern. Drew it yesterday, and this is why I say that I use patterns for a heads up, but it's the price action that matters the most to me. So we had an ascending triangle pattern with a horizontal resistance level, and we had a higher low tightening range coming up to it. And you can see we broke that uptrend support line here with the price closing below it multiple times. Now, if you were trading just based off this pattern, you would have exited and left money on the table exiting as a bull. But I like price action. I say price action is king because we have a higher low pattern. We had a low here, a higher low, and a higher low. So even though we broke this tightening range and lost an uptrend support line, we never broke the higher low pattern, and we saw a bull break and continuation to the upside. So we'll also be looking at this level to potentially act as support if we continue to pull back previous resistance, now acting as support. But that's a nice example of why price action is king, and it is not the pattern for me personally that indicates entering and exits positioning. So looking at gold, let's look at the miners now, actually. So gold's still in control, but we are seeing the potential start of some normal, healthy consolidation. And we saw a bearish reversal candlestick in these miners yesterday, and they shook it off today, but we are forming bearish reversal candlesticks again. So a doji of indecision at the top of an uptrend after a breakout is still a bearish reversal candlestick, but we are still holding the upper Bollinger Band, 25.49 for GDX. So a nice little higher low and a higher high, not a ton of upside compared to yesterday, but some more healthy gains. And if we see a red day and a loss of the upper Bollinger Band, it's the same story as yesterday. As long as we hold the upper Bollinger Band, the bulls remain in breakout mode and in control. If we lose it, we look for normal, healthy consolidation, and we'll look to the 200-day moving average of 24.98 as the first level that we will likely test. The weekly chart still very much favoring the bulls. No sign of an upper wick of profit taking. 2 trading days left to go, and resistance is 25.86 on GDX. And GDXJ has already broken this resistance level from the end of October. So a little bit of a step ahead in terms of breaking previous resistance on the weekly time frame. So same thing, a little bit of an indecision candlestick at the top of an uptrend, Upper Bollinger Band support still holding, but if we lose that level tomorrow, we will look for normal healthy consolidation, and I'll be looking down at 41.38, and then there's support down. There's a gap to fill, 39.30. That's a long way away. We'll take it one day at a time. All about the Upper Bollinger Band support, which is still holding. Weekly time frame did break that lower high back at the end of October of 41.34. Upper Bollinger Band resistance is 43.29, but the bulls very much in control. And again, the pattern I'm watching on this weekly time frame is a higher low pattern. We've seen a higher low every single week that this bounce has played out, and this is now 8 weeks in a row. So once that pattern breaks, it's going to be a very clear indication that profit taking and consolidation is likely, but we're so far above the current low of this week that is not a concern of the bulls at this point. It's just something to keep an eye on. Whenever I use that pattern on any time frame, if I see a 5-minute chart that keeps forming higher lows, I will note that if we see a break of the higher low pattern, that's signal number one that we're potentially going to see some pullback and consolidation. So long story short, the gold bulls are still in full control, but we need to be aware that normal healthy consolidation is likely just around the corner due to the breakout that we have seen. Same thing with the bull miners. They are still in control because we are holding the upper Bollinger Band. We just know that upper Bollinger Band is going to be significantly higher tomorrow, and we're going to have to see some continued very strong movement in order to maintain that level. Otherwise, normal healthy consolidation is likely coming. So if you are going to try and make a bearish entry into some bear miners on that normal healthy consolidation, you're going to, number one, have to be using a stop loss because you're trading against the trend, and anticipate that that bounce is going to be short-lived. We have not seen 2 strong green days on these bear miners in a row in a very long time. So you would want to be quick in and out with that entry, trading against the trend. We are oversold on some of these bear miners. Dust is oversold with the RSI under 30 on the daily, as is JDST. Lower Bollinger Band is resistance, so same story. Although Dust has the lower Bollinger Band as support currently, so I would expect Dust to see a little bit of a stronger bounce just because it doesn't have that resistance to deal with. So bulls in control, any pullback will be normal and healthy. So for the bears, any bounce will be anticipated to be short-lived. I appreciate you watching. I hope you have a great night. Update those upper Bollinger Bands at the open.